And I think it's good to start off with a very popular subject, which is assumable policies. So I want to pick your
insurance.
Yeah, for flood insurance. So I want to start there.
All right.
Pick your brain on that. Tell me about assumable policies and what they are, and let's go.
So this is something that wasn't really a thing before a few years ago. FEMA changed a lot of their rating guidelines. They came out with their new 2.0 system, which has been a lot of fun. Sarcasm. They changed the rates to where there's no more. They're all actuarial rates now. So when you go get a flood policy now, even if you're not in the flood zone, it could be $3,000-$4,000. Or if you're in the flood zone, you could be at $6,000, $7,000, $8,000 very easily. And this isn't just on the beach. This could be in Cape Coral. This could be on the canal. This could be on the river. So a lot has changed with assumable policies. Well, not a lot has changed, but a lot has been brought up about assumable policies. And we get that question all the time with new prospective clients that call us for homeowners. So say somebody calls us for a new home quote, and they always ask about homeowners. Some ask about flood right away, and they say, well, do you know if the current homeowner has a policy now? And that's always something that most time they don't know. So they lean back on you guys, the realtor, to try to help figure out that information. So basically what an assumable policy is if you have a FEMA policy, and FEMA is a standardized product through any company. It could be USAA, it could be Hartford, it could be Allstate, it could be Progressive. There could be 100 different products that say a name of a company, but if it's NFIP, which is National Flood Insurance Program, it's a FEMA policy, and therefore it is assumable, meaning that new person that's buying the house can assume that policy one of several ways. So assumable, a lot of times people think the common way that we used to do is you basically take it over, you transfer it, which is like the only policy you can transfer. Most times ownership changes. You can't just take over that policy, whether it's your son, your brother, a complete stranger. You can't just take over. It has to be rewritten. Well, with FEMA flood, you could. But there's a couple ways to do it, though. So I'm sure you've probably seen this with some of your clients being a hot question, right? Mm-hmm. So assuming it as a transfer is one of the easier ways and one of the common ways we see it a lot of times. That's basically where the new buyer takes over the flood policy at the current rate, which is a lot of times a lot cheaper than the brand new policy, but that has to be transferred and has to be accounted for during the closing because that policy never cancels. The money that was gone into that policy, say it was a $2,000 premium, if that seller transfers that policy, they don't get a refund. And then they call us in a few weeks and say, hey, how come I never got a refund? And it's happened, probably more than you imagine. It happens a lot because it's something that wasn't really common until a couple of years ago. An easier way to handle it, I think, for you guys as the realtor, as the broker, as the title company, is to rewrite it as a new policy, but with the prior rate. And all you have to do that is get a copy of that declaration page. And we can basically take that policy, put the policy number into the FEMA system, and it'll say, hey, this is their rate, and it basically takes it over. But this has changed because when I bought my house in 2014, it was a lot different. You could grandfather back then, and that's why these assumable policies make sense. Like I bought my house in 2014. It's right across the street from the river. One reason why I got it so cheap back then was because flood was $5,000 a year, and everybody that kept looking at it saying, "Oh, great, homeowners is $700, flood is $5,000." No, thank you. And eventually I got to it when I finally got my bid accepted. And I'm like, okay, what's the problem here? Is it Chinese drywall? Is this? It's flood. And I kind of chuckled. Like, oh, that's it? And again, me and Jesse got it down to like $600-$700 for the year. That was it. And it's gone up a little bit, especially the last few years. But, back then you could grandfather a plan because when it was built in compliance at the time in 2002. So even though the flood maps have changed, it didn't matter. You could prove to FEMA that, hey, at the time this was built, it was built a foot above the base flood at the time. And you could do that back then. You can't do that anymore. So that's why these assumable policies have become so important, because if you have current flood insurance now, being able to sell that house with $1,000, $2,000 flood policy when the flood will be $5,000, $6,000, $7,000 a year for that new buyer is very attractive. It's very attractive. That's saving them. Well, if you're talking about $4,000 difference, that's $40,000 in 10 years. Can't do that anymore. So that's why these assumable policies have become so important, because if you have current flood insurance now, being able to sell that house with $1,000, $2,000 flood policy when the flood will be $5,000, $6,000, $7,000 a year for that new buyer is very attractive. It's very attractive. That's saving them. Well, if you're talking about $4,000 difference, that's $40,000 in 10 years. That's crazy. It's huge.
Right. Yeah.
So how often do you see that, by the way? You
Pretty often.
Yeah.
Now it feels like it's almost on every deal. Now I've had people tell me it's not assumable. Is there a case where?
So I mentioned NFIP FEMA. If the policy is a private company, it's up to their discretion, and their discretion the last couple of years has not been very kind. So we've had a lot of policies like through Neptune, through Beyond, to where a very good rate, and the problem is it has to be written. Now, Sometimes that's not a bad thing, assuming that they're still writing, because what's happened is maybe we wrote that policy 4 years ago and it was the cheapest rate at the time, and now they're not writing. After Ian, a lot of these private markets, after Ian said, no, we're not going to do it in this zip code, basically most of Cape Coral for that matter now in the flood zones. But we still get some companies that do it, and it's not too bad. But that becomes a problem if they have a private flood policy.
Well, I had no idea. 'Cause you're using the term rewrite, so I just want to make sure that everybody else is clear because I wasn't. And when you say rewrite, first off, let me back up. When you talk about assumable, I assumed that when my buyer buys the home that they're automatically doing business with that seller's insurance company, but you're using the term rewrite. So in other words, I could take refer my buyer to you and the policy switches over to you, or how does?
So if we do a flood transfer, then yes. I mean that, so just say for example, seller has a policy that goes from February 1st to February 1st. A buyer buys it April 1st. He can transfer that policy, and it's a pretty simple process, just like a one-page form, that we basically don't ever cancel that policy. The same policy number, same effective date, same premium, everything stays the same except for the name on there, And we could transfer that policy from the seller to the new buyer. And that's kind of the way we did it at first. See, an easier way to do it now is to roll it over as a new policy, because you can do that as well, which the nice thing about rolling it over is then all of a sudden the new buyer gets an effective date that matches his closing date. And all of a sudden it becomes a much cleaner transaction to where the seller gets a refund. So instead of having to be like, hey, wait, how come I didn't get money at closing? Or hey, where did my refund go? They are getting a refund. It becomes much more like a similar cancellation of a policy due to a house being sold, And that's probably the way we've leaned more the last several months, last year really, because it's a lot cleaner. It's a lot cleaner for the realtor, the closing company, everybody involved, and especially the seller, which is typically our client a lot of times if we're doing it, because now they're not mad. Because a lot of times we'll have a seller that has the policy with us. The new buyer calls us because, hey, we see that you have your current insured with this company at this rate. Sometimes we can match it, sometimes we can't, depending on how long ago the policy was put in place. But they call us a lot, and so it makes it easier to transition that relationship from the current client to the new client. But yes, you can do it a couple different ways, but it has to be an NFIP policy. That's the key there.
Okay. And there's a process to it. You mentioned a one-page.
It's a one-page form. The transfer is very easy. Rewriting it is, rolling it over is also very easy. All we need to do that is the current declaration page. So say if it's a client of ours, it becomes incredibly easy because we don't need to contact you guys or contact the current homeowner. It's, if the policy is not with us, then it becomes a little bit of a cat and mouse game, because we're like, hey, can anybody contact this person? Sometimes these people don't even live in the country and sometimes don't even speak English, to where it's like you can't email them or contact them, and it becomes a bit of a cat and mouse game. And we've had some that actually fell through because we're like, they don't have it or we can't tell if they have it, But yeah, the transferable assumable policy has been a huge hot topic for us as agents. And it's also why a lot of clients I have that, we were talking earlier about these clients that paid off their mortgages. Some are on fixed income, some aren't. They just don't want to spend $5,000 a year for homeowners and $2,000 a year for flood. I've actually talked to a lot of my clients out of canceling their flood policy. I say, hey, look, if you want to cancel your homeowners, that's fine. Don't cancel your flood. You're paying $1,200 a year for flood. Mm-hmm. And a lot of times I'll lead off with the question, do you have any intention of selling your house in the next few years? And sometimes it's no intention at all. I'm never selling it. Sometimes it's like, well, I don't know. We'll see what happens. Anytime that second answer comes up, I say, well, I would definitely think twice about canceling this policy, especially somewhere like $700-800 a year. I said, number one, not only are you having the coverage there, God forbid, look what's happened the last few years in our city,
Sure.
Not only do you have the coverage there, which is important, but now if you sell that house, all of a sudden, and I'll do a new flood quote with them right there on the spot, and it takes like 5 minutes. I say, your new buyer would be paying $3,700 a year.
Wow.
You're paying $700 or $800 or $1,200. When you sell that house, it's going to be a lot easier for you to sell that house to somebody knowing that, hey, this is what I'm paying for flood, versus the surprise of, the sticker shock of like, oh, welcome to Florida, welcome to flood zones,
It can make it easier to sell the house when they got a assumable low flood insurance policy.
You're 100%. More in the expertise of that arena, but I'd imagine it has to help.
100% does. And from a seller standpoint, is it just call your insurance company and you can find out if it's assumable? Is it that easy, or how to?
Yeah, it's a quick phone call. And again, the nice thing about it, if it's NFIP, and the nice thing, the easiest thing to do is get a copy of the declaration page, because even if it says Allstate, USA, Hartford, Wright, Monarch, it'll say at the top National Flood Insurance, Kalispell, Montana. Which is their headquarters, and then it's NFIP. So those are almost always, at least for the ones I've dealt with, they're always transferable. It's once you get into the private ones, if you see anybody that has Neptune, you see anybody that has Beyond Flood, that's when it starts to become, and we've had some that, again, few, but some, maybe 1 out of 9, 1 out of 10, that have been transferable, but it's up to the company's discretion and whether they're willing to keep insuring in that area. So.
Well, we talked about this a little bit earlier, but I want to dig in just a little bit deeper. What do homeowners do to reduce their premiums? What do they do? Like if they want lower insurance, what's your recommendations?